This is the Asia Trade. I'm Shery in Tokyo. These are the top stories this hour. A positive lead-in for Asia after a rally in big tech lifts Wall Street. Investors brushing off weak economic data ahead of President Trump's tariff rollout. The White House says the new trade barriers will take immediate effect later Wednesday, with Canada, Mexico, and the EU among those preparing potential retaliation. And we focus on fallout for the global auto industry, with Mercedes mulling a pullback in the U.S., even as some buyers rush to beat price increases. We'll start you off with breaking news out of South Korea. We are getting the CPI numbers for the month of March. Right now, we're seeing growth of 2.1% year-on-year, beating and coming in above economists' expectations. When it comes to the month-on-month number, also a beat, 0.2% month-on-month. Exclude fresh food and also exclude energy prices, and you get growth of 1.9% year-on-year. We had a little bit of a slowdown when it comes to gasoline prices in South Korea. That might have been felt with a little bit of downside pressure on prices, but at the same time, of course, we continue to see a weaker won, which has increased import prices. So right now, year-on-year, growth of 2.1% for inflation, accelerating from the previous month and beating economists' forecasts for the month of March. Take a look at how we're setting up for the market opens. We saw the Kospi gain ground in the last session for the first time in 4 sessions. But we're seeing downside pressure on the Korean won and, of course, a lot of risk-off sentiment across Asia as well. We are seeing Nikkei futures rebounding 0.2%. We'll be watching the open. We have seen the Nikkei gain ground after falling into a technical recession earlier this week. We're watching the Chinese yuan because it's now at levels that we haven't seen in about a month, being pressured by, of course, the upcoming U.S. tariffs, reciprocal tariffs, country-based. Take a look at how U.S. futures are coming online. It was sort of a challenging session overnight. Not a lot of conviction, weak breath overall, although the S&P 500 managed to gain ground, clawing back losses about 1%. And a lot of expectations right now that the Fed might cut rates, or given the weak manufacturing and jobs data, that's pressured Treasury yields as well, which continue to fall. Of course, we have talked about the first quarter in 5 years of bonds have outperformed U.S. equities, but really all to do with markets bracing for those tariffs. The White House now saying that those tariffs will take immediate effect when they're revealed on Wednesday.
My understanding is that the tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while.
For more, let's bring in Bloomberg's Christopher Condon. And Christopher, we have heard how much President Trump has teased these tariffs. So what do we know so far? Because we've heard that they could be country-based, but there have also been reports about universal tariffs as well, of as much as 20% across the board.
Well, really, the unsettling thing is that we still do not have a clear picture how broad they will be, what the scope of they will have, how big they will be, the numbers, how many countries they will apply to. So it's still very much a wait-and-see game. Across the economy, people are waiting, businesses are waiting, investors are waiting. And I have to say, the one other unsettling thing is, and I've been asking folks, if we get a clear indication tomorrow of what the new tariff regime is, what are the odds that by the end of April, that regime will still be in place? And people just kind of chuckle over that. In other words, say, well, we won't know. They could come on and then they can come off. So we are in the middle of a period of extreme uncertainty that is already weighing on some of the economic data. Most of the hard data is still pretty good. Growth is holding up in the U.S. The labor market looks still quite strong. And inflation, of course, is not quite down to the Federal Reserve's target. What's going to happen next really is very difficult to say, but I think we're in for even more of a period of uncertainty, even after this announcement.
And you're seeing that really being priced in, especially in the bond markets right now, right? I mean, the economic data seems to be weakening, at least in the few data sets that we've seen so far. what are the implications of retaliation coming from trading partners, and how much more uncertainty would that really inject in the environment right now?
Well, I think the important thing about retaliation is that it would increase the impact on inflation. As many people have spoken about, the textbook take on tariffs is that they are a one-off impact, have a one-off impact on the price level. And then if they're put in place and they stay there and they're not raised again, then that's just a one-time impact. And policymakers, say at the Fed, can look through that, and they know that inflation will come down after that. If, however, there's a lot of retaliation in a rolling fashion from foreign governments that affects the price of, or affects the ability of U.S. companies to compete in those markets, then you'll have a lingering rolling effect. And in that case, it's much less clear that the impact on inflation in the United States would be transitory, as we've heard the Fed chair talk about it. And that raises greater worries about what the Fed would do. Of course, we still have a situation where inflation is still above target. If inflation expectations, very importantly, continue to slip upward, the Fed would really lose its ability to cut rates. And if the labor market began to weaken, then they'd really be in quite a pickle.
Bloomberg's Christopher Condon there with the latest on those tariff threats. And in fact, we've heard about retaliation from Canadian Prime Minister Mark Carney, saying that he's ready with more tariffs if President Trump goes ahead with these new levies. Carney says that Canada has held back on a response to auto tariffs, and there are measures he can take that will level the playing field.
As I also mentioned to the President, and was very clear, we will respond to additional measures. So we will put in place retaliatory measures if there are additional measures put against Canada tomorrow.
Carney has also spoken with Mexican President Claudia Sheinbaum as the new levies loom. Let's go to Mexico City, and economy and government reporter Maya Averbach joins us now. Maya, so we've heard these concerns that trading partners could band together and perhaps even get closer to China. For example, President Trump has said that he's not really concerned about that. But when it comes to Mexico and Canada, who've borne the brunt of the tariffs so far, what did they discuss?
Well, we know that these two leaders talked about trade and investment. Both of them are really concerned about the future of the North American Free Trade Agreement, which Trump has spoken against and says he wants to redo. So this is a huge threat for Canada and for Mexico. We saw them taking different tactics. Canada responded right away with retaliatory tariffs against the U.S., while Mexico's Claudia Sheinbaum held back and said she wanted to wait and see what the tariffs would be in the end. She's taken that same approach now and said, I want to see what Trump's tariffs are going to be on April 2nd, and on April 3rd, I'm going to announce what Mexico's answer will be. At the same time, she said that she wants more goods that are currently imported from China to be produced here in Mexico. It's part of a strategy to bolster domestic production, but also to turn towards the Trump administration and try to say, we are partnering with you on this. We would like to strengthen North America, have more investment and more trade. It's fundamental for the auto industry and for other industries as well. As far as we know, the call with Canada today was about the same, about building the region and having these three countries work together as a bloc instead of trying to peel off and turn towards other possible trade partners.
What has Mexico done so far to mitigate some of those issues that President Trump is focused on, such as immigration and illegal border crossings? And what does a retaliation from Mexico could look like?
We don't know exactly what the retaliation might look like because Claudia Sheinbaum has been cautious and not tried to put a specific number on any kind of retaliation and is trying instead to negotiate with President Trump. We've seen a steep drop-off in the number of migrants trying to enter the U.S., in part also because of closures in the U.S. of access to asylum and the broad deportations announced by President Trump. Mexico has done its part, deploying its National Guard to the U.S.-Mexico border to have a show of force in areas where migrants were crossing. It's something it's done before in previous governments, but it did respond to President Trump's request. At the same time, we've seen the Mexican government say it is taking actions to stop fentanyl from reaching the U.S., and it did turn over several high-level figures who were accused of crimes related to drug trafficking and organized crime previously to the U.S. in a bid, again, to appease the Trump administration and try to appear like a collaborator instead of a foe.
Bloomberg's economy and government reporter Maya Averbach there with the Mexican response, of course, to those potential tariffs. But also we're watching what China will do next. Chinese Foreign Minister Wang Yi is blasting Trump's tariffs on China so far as unjustified bullying from the U.S. Let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, we had seen President Trump ask for a review of that phase one trade deal that he had with China during his first term in office. What are you watching out for now that we're so close to getting these reciprocal tariffs?
Yeah, I'm looking out for that report. We don't know if it's going to be released publicly or through private channels or government channels, I should say, before it's essentially given to the media. But that review of the phase one trade deal was due to be released by the U.S. Trade Representative's office today, April 1st, but we haven't necessarily seen it yet. It's likely to set the stage for any future negotiations that the Trump administration has with China on future tariffs. But again, we simply don't know what reciprocal tariffs against China's VAT rebates they give to its exporters and also non-tariff barriers that China has. We don't know what the Trump administration is going to tack on to its already additional 20% tariffs that they've applied on two different occasions so far in the first 2 months of the Trump administration. And again, right now, China's sort of in a waiting period like the rest of the world, with Xi Jinping essentially ordering the bureaucrats across China, the officials, to remain calm, the wait-and-see approach. But we have seen, especially after that second 10% tariff added during right before the National People's Congress in early March, essentially China had it ready to go. The retaliatory steps on some U.S. agricultural products, rare earths, and also, of course, its continual appeal to the World Trade Organization complaint. So we have to see. 24 hours from now, we will likely start seeing that Chinese response. Right now, it's a bit of a guessing game how far Trump will add to those tariffs. But keep in mind, if you take those 20% additional tariffs already, say, for example, Bloomberg Economics is calling this a severe case example, but if you're adding 20% more on top of that, that brings essentially the average tariff against Chinese goods up to 52.8%. That in itself would be close to that worst case scenario that Donald Trump threatened on the campaign trail of 60% across the board on Chinese goods.
Steve, of course, President Trump blames China for America's opioid crisis. What do we know about what's being done about fentanyl right now?
You know, fentanyl was the front and center issue that Steve Daines, the Republican senator from Montana, who is Trump's unofficial envoy to the China Development Forum, which I attended, what was it, last weekend? The weekend before last. And he had a meeting with Premier Li Qiang, and all he talked about was fentanyl, fentanyl, fentanyl. China's readout of that meeting in the Great Hall of the People did not even mention fentanyl. So that's a big problem. When one side is saying this is the issue, the other side's not even addressing that this issue exists. Other than what Wang Yi, who is by far the most outspoken Chinese official, he is the foreign minister, in that interview with Russian media, essentially saying the U.S. needs to remove unjustified levies and engage in equal talks if it wants to resolve the fentanyl issue. China will firmly retaliate if U.S. continues exerting pressure and resorts to blackmail. So, again, they're a bit at loggerheads right now. Steve Orlins, who is the president of the National Committee of U.S.-China Relations, essentially told me a couple of weeks ago at the China Development Forum that Trump and Xi need to meet. They at least need to, at very minimum, have a phone call so they can have common understanding of what each side is demanding, and then they can then parse those instructions out to the various bureaucracies and come up with constructive policies to address this issue. Right now, they're not even agreeing that this issue is their responsibilities.
Our Chief North Asia correspondent Stephen Engel there with really looking closely at China and potential retaliation and some of those issues that still need to be worked out. But we do have more to come on these Trump tariffs. We are going to speak to a former U.S. trade official about the effects on the supply chains as well. UBS Wealth Management tells us how to take advantage of market volatility. And we discuss Elon Musk's influence on U.S. politics with the Auburn University. We have much more ahead. This is Bloomberg. A little bit of a mixed picture across sovereign bonds across Asia right now, but this is off another rally in the Treasury space overnight. Traders slightly boosting the bets on Fed easing. We did get some weak manufacturing and jobs data. We do have the U.S. jobs report on Friday also coming up, although we could get a little bit of a rosier picture given the reversal of some government grant freezes that we saw earlier in the year. We had already seen this plunge in U.S. consumer sentiment, so we'll be watching that sentiment across the economy in the U.S. and what that means for the global bond space. But let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, good to have you with us. I mean, we saw banks actually overnight on Wall Street on Monday pull off this massive $8 billion debt deal. Are credit markets rightly pricing in the risks right now?
Well, Shery, credit markets have been a little bit of a puzzle for quite some time now, showing very little, even when Treasury markets were at times positioning for a potential recession, credit markets were completely ignoring any possibility of that as spreads just kept grinding tighter and tighter. And even now, when we've had, we entered this year with the US economy looking a little bit potentially fragile, and then becoming very much more so under the impact of President Trump's tariff threats, and also the delayed impact of those still very high Fed cash rates. So stocks have come crashing down, and yet we don't have that sort of move going on in credit, mostly. Junk bonds have held up surprisingly well. There's something of an attraction there with credit because they do still offer some slightly fatter yields, and we are still in a yield-seeking environment. But yeah, it's a puzzle, and that would be your real sign that we are going to get a recession, would be if those spreads suddenly started to widen. If we did get the sell-off that a lot of people have been seeing as an accident waiting to happen.
But sovereign bonds, at least, we are seeing the continued rally overall globally at the moment. Is this just factoring in the latest data sets that we're getting from the U.S.?
Well, the data sets from the U.S. and from elsewhere are, there's a reason why most central banks, ex-Japan, have been moving to lower interest rates. That's because not just because inflation has been easing, it's also because there are signs that economies are slowing. Again, those signs of an economic slowdown were there, in the latter half of last year. They've become more acute this year, and they're becoming, even more of an issue with every, U.S. contradiction that comes out about what we might get with tariffs. And I think we're very much in danger still of underpricing the potential impact because everybody's so focused on the idea that, well, we will get the big reveal, on Liberation Day as to what the global tariffs will be. But whatever gets revealed is still just going to be the start of what might come, because there's no guarantee whatsoever that what is announced will be what we end up with. There's likely to be a lot more uncertainty, and even if there was talk about a 20% general tariff, now it might be less than that, or it might be spread across different countries. We've still got sectoral tariffs to come, and even if the general tariff is 10% instead of 20%, that's still a huge increase from no actual general tariff before we came into this.
Yeah, that's the problem, right? How do you do business in this environment? Bloomberg's Garfield Reynolds there with a look at the markets. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade, the latest from the corporate front. Xiaomi has confirmed that one of its SU7 electric vehicles was involved in a crash in China that killed 3 people. According to its initial report, the car's advanced driver assistance function had been engaged less than 20 minutes before the crash. It added that alerts were issued because the driver apparently wasn't holding on to the steering wheel, which is illegal in China. Bloomberg has learned that Alibaba is planning to release an upgraded version of its flagship AI model, Qwen 3. Our sources say the new offering may arrive later this month. Alibaba has been releasing AI products at a fast clip this year as Chinese tech companies flood the market, threatening to undercut premium offerings from U.S. rivals such as Google and Microsoft. Meta is planning to introduce its first glasses with a screen by the end of the year, codenamed Hypernova. The glasses will be priced at over $1,000 and will include hand gesture controls and a screen to display photos and apps. Meta sees the new glasses as an alternative to Apple's iPhone and other mobile devices. Take a look at how U.S. futures are trading at the moment. We have seen a lot of fluctuations in the overnight session, not a lot of conviction, which is why, although we saw some gains on Wall Street, we still had very weak breadth. The S&P 500, though, still managed to claw back losses of about 1%. There were some expectations and a slightly more boosted bet on Fed easing. We did get some weak manufacturing and jobs data. We have the big jobs report, the payrolls data on Friday as well. We're expecting to see warmer weather and some unfrozen government spending supporting some robust hiring for the month of March. Right now, Nasdaq futures gaining 0.3% after we saw that rally in the Magnificent Seven overnight. We have more ahead on the Asia trade. This is Bloomberg. Former U.S. Trade Representative Katherine Tai says it's important to focus on the legal authority that the Trump administration invokes as it announces reciprocal tariffs. Tai told Bloomberg that Trump has showman instincts when it comes to making tariffs exciting.
For those of us who've been working in trade policy for 20, 30, 40 years, tariffs are just a part of the tool set when it comes to trade, and actually a really important part. So I just want to start with focusing on what a tariff is and what it isn't. So in the conversation right now, tariffs are either an incredibly awesome, beautiful thing, or it's a real something that is going to have a huge chilling effect on the economy. Which one of those will actually manifest depends on how the tariffs are used and what they're going to look like. And I think the best analogy that I've come up with so far is that a tariff in itself is morally neutral, is actually not that exciting. It's just a tool, just like a 2x4 is a tool. You could take a bunch of 2x4s and you could build something. If you've got an architect's blueprint in hand, you could build a deck, a house, a school, a factory. Or you could take a pile of 2x4s and you could pick them up and you could swing them around your head and you could run down the street and break people's windows with that 2x4 or threaten to beat people up with it, right? It's all in what you are planning to do with that 2x4 and whether or not you have a plan. So when it comes to this great announcement that's coming tomorrow, and by the way, I think we really have to pause and recognize and acknowledge President Trump's incredible showman instincts.
Sure.
We are anticipating, guys, an announcement about tariffs. I mean, in my trade policy experience, that's not very exciting, and yet this administration has managed to make it something really, really exciting. What I would say is this. I also have no idea what's coming tomorrow, and that's kind of stunning, given how much play this topic has had in this president's administration in terms of the focus on it, that even today, 24 hours before, we still don't know. And according to news reports, including from the Wall Street Journal this morning, it sounds like the administration itself also hasn't decided what the tariffs are going to look like.
Former U.S. Trade Representative Katherine Tai speaking to Bloomberg's Balance of Power. Let's bring in Claire Reade, Senior Counsel at Arnold and Partners. She previously also served as the Assistant U.S. Trade Representative for China Affairs. Claire, good to have you with us. I mean, we heard from Katherine Tai, tariffs are usually boring, but it's become very exciting. Not just exciting, but also very complicated. Reciprocal tariffs, universal tariffs. Aside from the fact that we don't necessarily know the levels, the duration of these tariffs, what are the implications of the fact that they seem to be being implemented, effectively taking effect, instead of just being used as a negotiating tool? Does this make a significant difference?
Well, I think the real problem with the tariffs, in addition to the points that Katherine made, is that there is great uncertainty, which makes it extremely difficult for businesses to know how to react or plan. We don't really know what the purpose of these tariffs is. It has been stated that it's going to be a terrific revenue source, in which case these are not just being put up there as a basis for negotiations, and life will return to a low tariff norm after countries come in and everybody rejiggers their tariffs so that they're lower and the same towards each other. If, on the other hand, this is a signal flag for negotiations to come in and remove tariff barriers, and those negotiations could come quickly, then it might end up with a better outcome, but nobody knows. And the truth is that negotiations take a while. Plus, we have the political factor, which is other countries resent the United States coming in and unilaterally swinging around that 2x4, even if the purpose of it is ultimately to build a better, stronger factory or house in the United States.
President Trump didn't seem too concerned when he spoke yesterday about allies banding together and moving closer to China. Is that a potential risk, though?
Absolutely. In a sense, it's not so much that other countries are going to embrace China, because I think there is a more realistic sense of the challenges that China's massive economy and massive economic ambitions and plans. There's more caution in the rest of the world about that. So it's not that there's going to be a movement to embrace China warmly, but there is going to be a defensive movement away from the United States and a clear-eyed assessment of how do you maximize your own self-interest if you are part of the global trading system. That could result in closer ties to China economically. It could.
Claire, can you at this point sort of assess or estimate what the global trading order will look like after President Trump's 4 years?
Wow, that is a very big question and very difficult to answer. The one thing that we know is the old system is being, what's the best word for it? At least dismantled. Maybe reconstruction is possible, but the rules of the game that said that you did not just impose tariffs when you wanted to seem to be loosening. And the disciplines that used to exist to constrain tariffs being put on when it was not deemed to be legitimate, those rules are weakening in the international system. So it is very difficult from this vantage point to tell whether we will get to a new normal that is stable. And that, of course, is what businesses and governments around the world ultimately want if they want their economies to grow. So there are forces that want to achieve this, but right now we're in a very disrupted stage. So it's very hard to tell.
You made a very interesting point earlier on that we don't necessarily know what President Trump essentially wants to accomplish here. And it seems that trading partners and others don't understand either. Where is the point of compromise for partners like China when they don't seem to agree that, say, fentanyl is an issue at all?
I am not sure whether China's statements about fentanyl not being an issue would be the same statements made behind closed doors in Zhongnanhai, for example. I do think that China would, behind closed doors or open doors, maintain that the United States has no business trying to prevent China from developing economically or trying to help its citizenry thrive. I think that is a core belief in China. I do think on fentanyl that there is much more that China can do, and China has the power to take more aggressive steps. My suspicion is that China has been biding its time to see exactly what the chessboard looks like from Trump. And they will then make their moves based on that situation. So China will not lie down or kowtow to Trump, but China will be strategic in how it assesses what the best next steps are.
Sort of how they behaved during Trump's first presidency. Claire Reade, good to have you with us, senior counsel at Arnold and partner, with, of course, that breakdown of what to expect when it comes to tariffs and the global trading order. We have more ahead. This is Bloomberg. Automakers, including General Motors and Hyundai, have reported higher sales in the U.S. due to the threat of price hikes from tariffs. Auto reporter Keith Naughton joins us now for more on this. And Keith, we've seen now U.S. consumers trying to get ahead of those potential price increases.
Absolutely. There's a big rush on right now to buy cars before the tariffs take effect and prices go up by thousands. We saw the sales rate in March hit almost 18 million. The previous month it was 16 million. So it is really a rush to the dealership at the moment to get the deals while they last.
U.S. automakers, though, are trying to lobby the government for some sort of relief. What are we hearing?
Yeah, so what they're doing, GM, Ford, and Stellantis, Chrysler's parent, are all talking to the White House and the Commerce Department and the U.S. Trade Representative, asking for a break on parts. They understand they're going to have to pay the 25% tariffs on fully built automobiles, but if there are secondary tariffs on every part, and there are thousands of parts in cars, they say that'll just break the bank.
How disruptive will this be for the broader supply chain in the auto sector?
Well, particularly if these tariffs go through on parts, it could be very disruptive. It could put smaller suppliers out of business. They just don't have margin for a 25% cost increase. Neither do the automakers themselves. The auto industry operates on very thin margins, 4 or 5%. So if you increase costs by 25%, they go deeply into the red.
And we're hearing that Mercedes-Benz is already thinking of pulling some cars out of the U.S. market. Why?
Yeah, I think Mercedes is going to be the first of many. They're going to pull back on their lowest price model. They're not going to put it in the market because they can't make economic sense out of it with a 25% tariff. I think you're going to see other automakers pull back from the low end of the market. There's already an affordability crisis in the United States. The average price of a car is close to $50,000. And what we'll see is the lower end of the market will just fall away. There's only 20 models under $30,000, and those are all threatened by these tariffs.
Bloomberg's Keith Naughton there with the latest on the U.S. car market. While we're also watching Tesla set to report its first quarter sales as the EV maker battles with vandalized showrooms and paused production lines. For more, let's bring in Steve Mann, who leads the global autos and industrials research for Bloomberg Intelligence. Of course, we continue to see the fallout from Elon Musk's political involvement and his high-profile job right now across the U.S. government. But what do we know exactly about Tesla's performance?
Yeah, it's unfortunate that, there's a lot of vandalism, cars are burning down. A lot of that's happening in the US and across the world. But, we're positive on the company's fundamentals, actually. We think sales will be, sales will have an inflection point in the second quarter. Now, first quarter will be pretty weak. Part of it is, some of the things we talked about. On the vandalism, but for the most part, it's really because of the changeover of the new Model Y. Plants across the world that produces the Model Y have shut down for about a month. It's a little bit longer in Berlin. So that's why we expect sales to be pretty weak in the first quarter, but turn around in the second quarter.
Does that include orders from China as well?
Yeah, Chinese sales actually, we're actually expecting improvement in March. But overall, first quarter could be flat to slightly down. But March, we have seen some improvement. The difference for Tesla in China is this is the first time they launched the full self-driving option for Chinese consumers. And based on what we're seeing is through social media and through people we've talked to, consumers are wowed by the FSD functionality. They are very impressed, and I think that could generate sales, going forward for Tesla.
Any other brighter spots? We heard that battery sales to utilities perhaps could be one of those boosting the overall business.
Yeah, that's right. It's not that talked about in the marketplace. I think it could be one of the hidden gems where they can actually surprise the street in the coming quarter is the battery energy storage business. They just started a new plant in Shanghai, a low-cost battery plant to supply mostly to utilities. And yeah, it's a high-margin business. It's 30% at the gross level. versus cars, right now it's less than 15%. So we expect that to probably contribute for this year to contribute close to 15 to 20% of total EBIT. So it's not chump change, and it's a nice little business that they have, and it should help with profit for 2025.
Steve Mann of Bloomberg Intelligence, good to see you. Chinese auto giant BYD is another that we're watching. It's enjoying a strong start to the year with sales up almost 60% in the first quarter. The company says it delivered over 370,000 cars in March, bringing the total for the first 3 months to around 986,000. The numbers will likely be in stark contrast to U.S. rival Tesla, whose first quarter sales may be as low as 340,000, according to some analysts. And of course, we're watching Japanese automakers as well. Stock strategy is bracing for a brief pullback on President Trump's auto tariffs. Although we have seen in recent days shares of car makers bouncing back. They could bounce back. That's the assumption right now. We have seen some dip buyers already waiting in. Senior Asia stock reporter Hide Yukisano joins us now for the latest. Hide, of course, auto stocks are one sector that we're watching very closely. But overall, how are Japanese investors preparing for this?
Hi, Shery. This is an extremely difficult market condition for any market players. And in this kind of environment, some people think it's very useful to look at history. And if you look back to the 2018, when Trump sort of began the first China-US trade tussle, on the day he slapped tariffs on China, Japanese market plunged, but that was actually a trough, and the market rebounded after that. And similarly, when the actual tariff took effect in July and August, the market also rebounded. So if you look at that sort of examples, it's easy to imagine that there'll be sort of buy on rumor or sell on fact, or in fact it's the opposite. So sell on rumor, buy on fact type of trading this time as well. And auto tariffs are going to take effect later today. So I think that's what some people are expecting today at this point. So, and automakers have already fallen quite a lot, more than the topics.
The environment is so different right now from the first Trump administration, right? I mean, the BOJ is tightening, the yen has strengthened, and also we've seen such a significant rally already in Japanese shares.
Exactly.
So what are the implications right now of everything that's happened and the outlook?
Yeah, I mean, it's a good question because, I mean, what I was talking about is very sort of short-term trading tactics. Longer-term tariffs are going to have a heavy toll on the Japanese economy, especially if there'll be a reciprocal tariffs on Japanese products as well. And if Japanese car makers increase U.S. productions and decrease exports from Japan, that is not going to does not be positive for Japan's GDP and Japanese consumption as well, probably. So long-term implications are quite grim at this point. People are still hoping for some sort of negotiations between Prime Minister Ishiba and President Trump, and there'll be some sort of modifications later, but I mean, no one has a crystal ball here. So a lot of investors are still very cautious, and even some analysts who do expect a short-term rebound are very cautious about market outlook in later this year.
But the longer term, especially if we're expecting more BOJ hikes. Hideyuki-san, good to have you with us. Bloomberg Senior Asia Stock Reporter. We have more to come on the Asia trade. This is Bloomberg. It's time now for morning calls ahead of the Asia trading day. PIMCO promoting stable sources of returns in global bonds due to rising potential for a U.S. recession. The bond manager recommends diversifying away from U.S. equities into a broader mix of global high-quality bonds. The firm cites a strong case for fixed income to outperform equities while offering a more favorable risk-adjusted profile. 3 Wall Street strategists have lowered their year-end targets for the S&P 500, citing turmoil in the first quarter. But Goldman Sachs, Societe Generale, and Yardeni Research still expect the index to finish the year higher than its current level. Societe Generale predicts a 14% gain to 6,400. For both Goldman and Yardeni, it's the second cut in less than a month. These are some of the stocks that we'll be watching at the opens in Japan. Nintendo is now going to release its very much awaited Switch 2 console on this Wednesday. Nintendo shares have already rallied so much, so we'll see the reaction today. But you can see there that the last close was also a gain of about 1%. We're watching Nippon Steel because we heard that officials met with U.S. Commerce Secretary Howard Lutnick. Lutnick has also met with rival bidders like Ancora on the sale of U.S. Steel. Of course, that friendly takeover from Nippon Steel has encountered a lot of political pressure coming from the U.S. So we'll continue to watch whether those negotiations go anywhere. Right now, Nippon Steel fell 0.8% in the last session. And this is the picture right now on the future space with the S&P 500 pointing higher after a very challenging session, weak breath. We did manage to gain ground overnight, but it was still after falling about 1% at one point. Nikkei futures also pointing higher. We saw some gains in the previous session. The Japanese yen sort of holding steady under a little bit of pressure against the U.S. dollar. And you can see there the ASX 200 trading already underway, up 0.5%. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens as we continue to brace for those U.S. tariffs, Heidi. We've heard everything, not a lot of details at this point, but we've heard they could be reciprocal, country-based, but also perhaps tiered as well.
As you said it, Shery, it feels like we've been in brace position, or markets have been in brace position for quite some time, right? A little bit of sort of tepid sentiment today, but certainly very, very fragile as we look ahead to this idea that seemingly, you know, there's a lot of options still sort of being bantered about by the Trump team ahead of that Rose Garden event, Shery.
But what's important is really the expectations, right? The uncertainty out there. How do you do business in this environment? Not surprising, we have seen weaker economic data stemming from the U.S. We had weak manufacturing and jobs data, and that really had implications for the broader markets, with Fed easing expectations also rising. Take a look at the open here in Japan, because we're seeing the Nikkei bounce 0.4%, extending some of that rebound that we saw in the previous session. But remember, we also entered correction territory in the Monday session as well. The topics also gaining ground, the Japanese yen holding steady, very close to that 150 level. We've been really trading range bound for the Japanese yen against the U.S. dollar, but we'll be watching the yields on JGBs. 151 is the level for the 10-year yield as we continue to see that global bond rally. Treasuries also gain ground overnight. Take a look at how the Kospi is coming online, because we have seen significant pressure for the Korean won. The Kosdaq is gaining 0.7%. Automakers is what we're focusing on across South Korea, across Japan, semiconductors as well. A lot of those names that might really take a hit from those tariffs coming from the U.S. We had inflation numbers out of South Korea beating to the upside, despite the fact that we had gasoline prices actually falling during March. But it's really the fact that we're seeing a weaker Korean won pushing up import prices, which is also leading to accelerated prices in South Korea, Heidi.
Yeah, as you say, there's a lot of positioning in terms of how you can potentially protect against whatever we hear from the White House in the Wednesday session, right? But this is a picture when it comes to trading in Australia. We've been underway for about an hour or so. This is kind of the session that we're seeing play out at the moment. We are seeing some gains here. Stocks here in Australia seeing some modest sort of rally before these reciprocal tariffs. Of course, Australia hasn't managed to get that exemption either. Banks in particular seeing some gains. A second session when it comes to this rally, financials and real estate really supporting the benchmark higher. The Aussie dollar moving a little bit higher there, which is interesting as sort of an element of sort of risk sentiment. But we did see that Bloomberg gauge of the dollar falling after the US factory activity contracted in March. Prices accelerating. Trade, of course, across really G10 FX really looking very choppy at the moment. Shery mentioned we continue to see this resumption of Treasury buying as really the standout sort of Trump trade war trade, if you will. We are seeing options traders betting that yields will decrease after the announcement, but investors really gearing up for these tariffs, and we're seeing these in bigger options wagers when it comes to lower Treasury yields and expectations of perhaps deeper than expected moves from the Fed as well, depending on which side of that inflation debate you're really on, Shery.
Haidi, our next guest expects markets to remain volatile on the tariff impact, but thinks investors should take the chance to build long-term exposure. Joining us now from Singapore's Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, always good to have you with us. Before we get to those long-term exposures, what do you expect the immediate impact of the tariffs coming in the next few hours to be?
Yeah, and we try to give it a calculation. Of course, as you mentioned before, it's not absolutely certain. We think maybe if we look at it from the US side, effective tariffs, maybe another 4 percentage points a pickup, something like that. But yeah, it will be widely spread. Europe will probably see some. Asia will also see some. This is what we expect. But as an investor, and our clients also are investors, of course, what we also try to illustrate to them is, or at least our view is, yes, this could be another 2-3 months, towards the middle of the year, tariffs, retaliation, all these things happening. But eventually the reasoning behind it is that some deals are going to be struck. So negotiation, discussions, and then finally also some solutions are also on the table, we think, for the second half.
So where do you build those long-term plays?
Probably diversify. Yeah, so gold right now is one area that we like that also takes a bit of the risk out. Similarly speaking, the quality bonds, so to some extent government, but also good investment grades. But yeah, equities is also something we shouldn't forget about. And yeah, especially also the US, right? The US market already has come down. So we think, yeah, one can phase it a bit in, maybe not everything on one day, but over the next, maybe say 3 months or so towards the middle of the year, we would also see opportunities to go into that, because we think at the end of this year, we're going to see a higher level, about 6,400 in the S&P.
Yeah, Hartmut, one of the markets that you're constructive on is actually Taiwan. Of course, we've seen that market falling into correction territory. Does that make it sort of even more compelling from a valuation point of view now?
We think it does make it compelling. And one thing we also have to remember, and we're talking a lot about reciprocal tariffs, the other group, if you will, is the product tariffs, and semiconductors, of course, is in there, which is also relevant to Taiwan. Now, what we do know is that especially among the larger companies in the product chain, right, we have already seen sort of announcements that, yes, they're committed to invest in the US, invest more in the US. They have already invested in the US, right? So talking about another maybe 100 billion or so. So we're moving towards a situation where perhaps, this is not the riskiest of places. And yeah, as you rightly mentioned, the valuation is also come down quite a bit. So we think, and by the way, especially if you look at AI, artificial intelligence, I mean, in some areas there are not many global producers that can compete with them. So even there, if they do get more tariffs, which is not certain perhaps, but let's say they do, right, they push it down a bit, the supply chain, as they have actually in Trump 1.0.
How compelling is Europe, given the run-up that we've already seen, and how much of it is really just based on the, German fiscal sort of turnaround and the positioning there? Do you think there's further to go in that rally?
Yeah, that's an interesting question. After over the last couple of months, things have come up a little bit. The way we engage right now, because also we do realize the tariff negotiations with the US and the EU are probably not going to be that silent. So what we have done is we created a separate topic. We call it 6 Ways to Invest in Europe. And there we have put in, some of the defense spending, right? Some higher debt, some of these things. Yeah, you also mentioned Germany. We also have that, but we took out to some extent companies that are more exposed to U.S. tariffs, and we think that is the right approach to seek some exposure in Europe.
Hartmut, I'm having a little bit of a hard time seeing where Japanese markets could go from here because, of course, they're very much exposed to what's happening in auto tariffs, potentially semiconductors as well. But at the same time, we've heard so much positive sentiment coming from the changes in corporate governance in some undervalued companies as well. What's the long-term prospect when we also add the overlay of the BOJ?
Yes, that's a very good point, because if we look at the different markets around the globe, probably Japan, at least for this year, is the one where the central bank doesn't necessarily go down like in most other markets, but it actually raises, at least partially. That's what we expect. So what that means is you could also see some strength over time in the Japanese yen. And if you do that, then the opposite happens of what we have seen in the last maybe 2-3 years. It is not so positive for the export side of things, right? Because if the currency goes up, then that means the other currencies, right, the prices that you can generate goes a bit down. So probably the area I would mention is banks. Yeah, banks is really the place we like, but overall we have a neutral view, not least because we expect the BOJ to be a bit different this year than many of the other banks.
Hartmut Issel, always good to have you with us, Head of APAC Equities and Credit at UBS Wealth Management. And we're watching some movers in the Japan session, especially when it comes to Nippon Steel, because, of course, we continue to watch those negotiations on trying to take over U.S. Steel. And we've just heard that Nippon Steel officials have met with the U.S. Commerce Secretary Howard Lutnick. But Lutnick has also met rival bidders like Ancora, for example, on that U.S. Steel sale. Nippon Steel has recently offered as well to invest an additional $7 billion if it completes that $14 billion takeover. We're seeing a little bit of downside pressure early in the session. This is Bloomberg.
My understanding is that the tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while. And
White House Press Secretary Caroline Leavitt there. Let's bring our news desk editor, Jill Desis. And we're saying we continue to brace, of course, as we get into kind of the final hours before we get details. And Jill, it sounds like at this point there's relatively still a lot of options still on the table.
Yes, that's right. So ultimately, look, our reporting is showing that the Trump team is weighing several options and that they haven't totally settled on exactly what these tariffs are going to look like. You still have that reciprocal tariff idea on the table, this one that's been discussed over the last several weeks, where you would tailor tariffs to each of these countries depending on, what the Trump administration has in the past described as trade imbalances with all of them. At one point, as Treasury Secretary Scott Bessent was, describing this as sort of the dirty 15. But in recent days, we've reported, as have others, that Trump has kind of shifted back toward this idea of maybe more of a unilateral tariff or some kind of tiered system where, depending on sort of a segment of countries, they get certain types of tariffs. Maybe there's even a blanket tariff plan in place. So ultimately, all of this kind of points to this idea that we still do not have a ton of clarity over whether Trump has actually decided, finally on what kind of tariffs he wants to implement and how. Obviously, as you just heard from the press secretary there, Caroline Leavitt, saying that, there's still room for negotiation, after these tariffs ultimately take effect. So yes, ultimately, Heidi, I think, fair to say there's still a lot that's up in the air here, and it may just come down to that 4 p.m. Eastern press conference in the Rose Garden when we actually see what the Trump administration has decided.
I mean, I was going to say, room for negotiations, we're talking about just a few hours, and we're talking about nighttime as well. What do we know at this point in terms of how other countries that don't know what's coming up could actually retaliate?
Well, Shery, I mean, we've already seen at least some indication that some countries are considering types of retaliatory measures. Just over the weekend, we did have some officials from China, South Korea, and Japan even, kind of say that, they would be looking at some kind of a reciprocal action. I think, that was a bit of an eye-opener there to see, that you do have some countries that are in the line of fire here. I mean, look, the Trump administration has kind of pointed to various countries, whether that be China, obviously Canada, Mexico, the European Union, which have been subject to tariffs in the past, as ones that they're really looking at here, Japan, India. I mean, you've got a lot of major trading partners with the United States that could be considering some kind of reciprocal action. Trump himself has, tried to say that, whatever the United States ultimately puts into effect is not going to be as bad as, what he feels, countries are certainly implementing on the United States in terms of tariffs. But obviously, how much of that is just posturing, by Trump? Again, I think it kind of comes down to what these measures ultimately are. But, you have to think that there's, sort of backdoor negotiations going on with these countries, whether something's announced and then a few hours later is pared back. I think that's all certainly on the table. We did see a little bit of that with some, tariffs on Canada and Mexico, for example. That has been kind of an ongoing negotiation since those were announced, back in February. So I think, this is all just a long way of saying I think everything is still kind of on the table here until we actually see what happens at this Rose Garden event and then what kind of steps these countries take in the immediate aftermath of that to sort of reach, maybe some kind of a middle ground here with the Trump administration.
Bloomberg News desk editor Jill Deasy is there. And of course, we continue to watch for any potential reaction from other countries. Chinese Foreign Minister Wang Yi blasting Trump's tariffs on China so far as unjustified bullying from the U.S. Let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, so Jill is telling us that even with just a few hours to go for these tariffs to be announced, everything seems to be on the table. What are you watching out for in China?
Well, of course, I've just come back from China. I've spent the better part of the last 20 of the past 30 days in the mainland, from the NPC to the China Development Forum to Boao and then Shanghai over the weekend. And everybody, trust me, is talking about tariffs. And they've circled April 2nd as well as to really feel how far these tariffs are going to go, whether we're going to see additional reciprocal tariffs against what the Trump administration might label as non-tariff barriers that are in place in China. Also, the value-added tax rebates that the government gives to exporters as giving China an unfair trade advantage, even though Chinese levies on U.S. goods are less than what the U.S. applies to Chinese goods. Trump administration might use those other non-tariff barrier and VAT rebates as justification to add on to the already 20% tariffs that the Trump administration in the first 2 months of his second administration have tacked on to China. And that is the real crux of the situation, because those 20% tariffs are on the fentanyl issue. Now we have to start seeing what kind of trade action the Trump administration puts on China for those unfair, quote unquote, trade practices of China. And Bloomberg Economics did a great deep dive onto the most severe case versus the less severe case. The most severe from tomorrow will be an additional 20%, which would take the effective tariff rate on Chinese goods up to 52.8%. That's getting to the threatened 60% level that Donald Trump pledged on the campaign trail. So, of course, zero additional tomorrow would be the best case, or even upwards of 5%. But China is definitely bracing for further action, and you can probably expect, based on past experience, back in early March when they added an additional 10%, the U.S. added, China was back almost immediately with its own, retaliatory steps.
the same time, Steve, we're also awaiting the USTR review of the US-China Phase 1 trade deal that's due today. Does that have implications, particularly when it comes to any possible talks between the two parties in the future?
Absolutely. And I think the Trump administration will use it as a basis for any future negotiations on any phase 2 of trade deal or any tariff mitigation, if that's even, going to be allowed by the Trump administration. We heard his spokesperson there essentially saying it's going to be effective immediately, which gives zero room for negotiation if indeed the Trump administration adds tariffs on top of the 20%. So it's wait and see right now. Xi Jinping has ordered officials in China to remain calm right now, even though Wang Yi the foreign minister, has been pretty outspoken, talking about the bullying practices of the Trump administration, talking about blackmail, talking about the law of the jungle. He's been most outspoken, but officials that I've come across, and I've listened to Li Qiang, the premier at the China Development Forum, they are expecting tariffs to go further than most predict. So again, it's a wait and see, but I'll bet you my last dollar that China has their reciprocal measures in place, ready to push the button if indeed the Trump administration goes further.
Our Chief North Asia correspondent Stephen Engel there. The former Fed Vice Chairman Richard Clarida says he doesn't expect the new tariffs to change the central bank's patient approach. The PIMCO Global Economic Advisor told us more about the Fed's challenges in the face of Trump's trade war.
It is a maximalist approach, and at least right now, if this reporting is correct, it doesn't look like it's so much country by country. Maybe this is the floor, but yeah, no, this is a much bigger hit to tariffs, I think, than most people were thinking, presumably the Fed even a couple of months ago. What does it mean for the Fed? I think Jay Powell at the March meeting, at least to me, signaled they're happy to basically sit on the sidelines. I don't see them acting preemptively to cut rates because they may be worried about a downturn. And so what that means is that it will take tangible data of a slowdown in payrolls, maybe a big pop in unemployment. So I see the Fed on the sidelines until the macro data really turns.
How long can they wait on the sidelines if there's damage being done just off the fact that there's so much uncertainty, and potentially, if this is an opening gamut, that uncertainty can persist for the next few months? Anne-Marie,
I think it's an excellent point, because we saw a preview of this in 2019. We had a lot of trade policy uncertainty, not very many actual tariffs that got put in place. Uncertainty is a headwind to growth. I think it's already slowing the economy. I don't think the uncertainty is going to be resolved tomorrow, especially if there's a negotiation as part of this. And so it's a headwind to growth. And I think the balance at the Fed right now is because of the stagflation threat, that inflation will be going up at least for a while and the economy is slowing. I think it makes the decision one that's a tough one, but I do think that on balance they're on the sidelines until the data really does turn.
So there's a question of what they plan to communicate, how they plan to use their tool of talk. And that seems like a new trend, or Jay Powell speaks. After every non-farm payrolls report, he's going to be speaking yet again on Friday voluntarily. What is the message that he's looking to convey?
My sense is he will not wander too far away from the press conference a couple of weeks ago, where he really did not really embrace the SEP projections of 2 cuts. He basically said we had to write something down. And so I don't really expect him to move beyond that. They're really in a wait and see, a wait and see mode when it comes to the data. But importantly, I don't see them acting preemptively, as the Powell Fed did when I was there in 2019. We cut rates because the economy was slowing on the uncertainty, but inflation was 1.5%. It wasn't close to 3%. So it's a different set of conditions now.
Could you just give us a sense of how much you've increased your chance of true stagflationary-like environments if you do get some sort of maximalist tariff proposal like what we're hearing from the Washington Post this morning?
Well, I think we already have at least a whiff of stagflation right now. Inflation mechanically will be moving up with the tariffs. Also, we're seeing some evidence, Lisa, that even goods prices before the tariffs go into play, goods prices are going up. So I think slower growth, higher prices, we have a whiff of stagflation. The real question for the Fed is this 6 months, or is this really becoming the new story for the next couple of years? And I think, again, it's too soon to tell, because this could come down to the art of the deal eventually.
Were you surprised to hear the T word make a comeback in the news conference? Transitory.
Well, I think a reporter did put that in the phrase. Look, as you know, I've said on your air, I was a charter member of Team Transitory, so I know the history on that. The textbook says the Fed should look through it, but I think they've correctly been reminding folks that only goes through if you're convinced, as Jay Powell, that inflation expectations are well anchored. And unfortunately, the UMich data is going in the wrong direction right now.
Former Fed Vice Chairman Richard Clarida speaking with Bloomberg Surveillance. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how futures in Europe are opening at the moment. Of course, we saw that jump, particularly when it comes to euro volatility overnight, spiking to the highest since US elections in November. Similarly, we've seen equities really position themselves for that Liberation Day tariff announcement volatility. You're seeing broad downside when it comes to Euro Stoxx 50 futures, DAX futures there as well. After what was really a pretty brief rebound in the previous session, we saw that gain of over 1% with investors focusing on tech and industrial stocks. They were the outperformers. We're expecting that President Trump will announce country-based tariffs on Wednesday. So we're seeing quite a bit of caution there. But in addition, we've also seen cooling EU area inflation as well. That adds to further uncertainty in terms of expectations from the ECB. But the European Union also preparing on its side to retaliate against the US in light of these expected tariffs.
And Heidi, take a look at how treasuries are trading in the Asia session right now. We're seeing a little bit of a reversal from that rally that we saw in the overnight session. Of course, overnight, we also got weak manufacturing data, jobs data from the U.S. and yields coming down slightly. We are at around the 6-month low when it comes to the 2-year yield on treasuries. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're trading with some trepidation when it comes to these Asian markets. We're seeing some declines now when it comes to Japan and Korea markets. Of course, these two are two very externally exposed markets when it comes to the impact and pressure we've seen on exporters ahead of those expected Trump tariffs. The Nikkei 225, particularly watching those automakers in particular as a source of pain for those expected tariffs, and the Kospi, of course, also seeing some pressure over the uncertainty over the CHIPS grant story as well. We're seeing a downside of about 0.5%. Here in Australia, the day after the RBA, of course, holding as expected with that cash target rate at 4.1%. We're seeing minimal upside, a little bit of gains when it comes to the financials and the banks in this session. We also do have the building approvals data from Australia, seeing a decline of 0.3% there. These data is particularly key given that one of the key issues, Shery, going into this election will be this issue of housing capacity and affordability.
We're also watching some breaking news on PMIs when it comes to Southeast Asia. We're getting the latest from Indonesia, Malaysia, the Philippines. Most countries, as you can see right there, that PMI number still in expansion territory for Indonesia and the Philippines, but softening from the previous month. Indonesia a little bit higher. Malaysia, though, has been in that contraction territory since June of last year. You can see emerging market currencies have been under pressure in the last session as well, holding steady at the moment. A lot to do with what we've been bracing for the longest time now, reciprocal tariffs coming from the United States. We actually saw a little bit of a rebound when it comes to the Mexican peso because we heard that they were having discussions with Canada as well, and that the leaders of those countries held a productive call on trade.
Well, Shery, this is something we're watching very closely. A Supreme Court election race in the U.S. state of Wisconsin is attracting an unusual level of interest thanks to interventions from the world's richest person. Elon Musk has been spending millions of dollars to influence the outcome, which could tip the balance of the court to conservatives. His efforts have included handing out million-dollar checks to voters as part of an unorthodox political strategy that's really tested campaign finance laws. Let's discuss this with Mitchell Brown, who's a professor of politics at Auburn University. She's also the director of the Institute for Election Administration, Research and Practice. And of course, the court declined to take up a lawsuit regarding the legality of these, big both in size and monetary value checks that Elon Musk has been offering in Wisconsin. But why is this so important to him, and how is this race, perhaps less interesting usually? How has it sort of turned into this referendum on Elon Musk and potentially the president too?
There are a number of reasons people are paying so much attention to this election. This is an unusual state Supreme Court election. They've raised about $90 million from outside funders. A great deal of this came from Elon Musk directly. A lot of people see this as the first test of the Trump presidency and people's reactions to Musk being involved in politics in advance of the congressional elections next year.
His strategy is obviously unconventional. He says it's just to get attention. On that front, he's obviously succeeded. But there's been lots of concerns and outrage over the legality of what he's doing, right? Does it worry you that the court refused to take this up as a lawsuit?
It was very interesting on one hand, because vote buying is illegal in the United States. We have a long tradition of not allowing any kind of influence. In fact, we saw after the 2020 election, some states passing laws that you couldn't even hand out bottles of water to voters in line when it was hot, because that was tantamount to vote buying. But suddenly handing out $1 million checks is not vote buying at a get out the vote rally. And so this is a strategy that it looks like Musk is testing out right now to see how well it will be received around the country for next year's congressional races.
What do the polls in the U.S. show right now about approval for not only Elon Musk but for the president as well?
I think the approval for Musk is a little bit lower than for the president. The president's still doing quite well in American approval ratings. One of the danger zones for him, though, in the public opinion polls is that the people who are strongly opposed to him outweigh the people who are strongly in support of him. And if that trend continues, it might be problematic in terms of holding on to the Congress for the Republicans next year.
It's been interesting that Elon Musk has made so much headway in U.S. politics, but also globally. He's been pretty vocal, right? Really showing his support for right-wing demonstrations, Brazil, Ireland, conservative governments, New Zealand as well. What will be his mark in global politics, especially when it comes for the conservatives?
I think if he can take over the Conservative Party in the United States, which is comparatively quite large, he has a really good chance of doing the same thing in other places. And so this is more than just a United States issue that we're dealing with. This is a global issue because he has his eyes on both markets and politics internationally.
We may not necessarily learn a whole lot about sort of divisive issues like abortion and some of the other Supreme Court issues that, would typically be talking more about when it comes to a race like this. But I do wonder, depending on the outcome and if it is, a big swing against the view of Musk's popularity, do you expect that to change his position at all in terms of the closeness to the current administration?
I would guess that that would not have any effect on Musk and the strategy that he's taken, because his strategy seems to be working for him very well so far. The Wisconsin Supreme Court election is an interesting test because the results of this election will shift the balance of power in terms of conservatives versus liberals for the foreseeable future. And it's why there's so much attention paid to this particular election right now.
The opposition to the Trump administration and the reaction, or perhaps the more muted reaction, has been really interesting element so far, just a few months into this and so much of the changes and policy decisions that have been taken. What is going on with the resistance? What's going on with the Democrats at the moment? Are you surprised that we have not seen sort of more vocal opposition?
The Democrats have been sort of flat-footed in their response to the Trump administration so far. There's some division in the party about what strategy they should take moving forward, though I would note that Cory Booker's record-breaking speech, he's now over 24 hours in the Senate, looks to be a real rallying point for the Democratic Party. And my guess is that we'll start to see people really talking about whether Booker has a chance at the national level moving forward.
Michelle Brown, good to have you with us, professor of politics at Auburn University. And these are some of the other stories that we're following at the moment. Ukraine's foreign minister says officials are working with the U.S. to reach an economic deal hours after President Trump accused Kiev of trying to renegotiate it. The top diplomat says Ukraine is prepared to endorse an agreement that provides security aligned with a significant U.S. business presence. President Zelensky says he will choose legal advisors for negotiations with the U.S. in the coming days. A group of 50 Republican and Democratic senators has introduced a new package of proposed sanctions targeting Russia if President Putin refuses to engage in ceasefire negotiations with Ukraine. According to a draft seen by Bloomberg, the sanctions include a 500% tariff on imports from countries that buy Russian oil. They would also bar U.S. citizens from buying Moscow's sovereign debt. President Trump is said to be planning a meeting with top officials on Wednesday to consider a proposal for divesting TikTok's U.S. operations from its Chinese parent, ByteDance. Sources say the administration is considering a deal that would include Oracle and Blackstone in a joint venture. The deadline for ByteDance to find a buyer is Saturday, although Trump has said he would be willing to extend. U.S. Attorney General Pam Bondi has directed federal prosecutors to seek the death penalty for Luigi Mangione, who's accused of murdering United Health executive Brian Thompson. It's the first time the Justice Department has sought the death penalty during Trump's second term. Mangione is set to go on trial for murder in New York State, which hasn't executed a felon in over 60 years. CK Hutchison may delay the signing of the controversial deal to sell its Panama Canal ports to a consortium that includes BlackRock. For more, let's bring in conglomerate reporter Shery Zhao. Shirley, what do we know at this point?
So CK Hutchison may not sign any agreement on the Panama part of the deal with the buying consortium, which includes BlackRock and a Europe-based container port operator, TIL. We learned from sources that the deal is not off. They need more time to complete related works, including due diligence, tax, accounting, etc. So works are still progressing.
So if we don't get a deal signed today, what are the implications for the company and the broader transaction?
So the Panama part of the deal is a part of a broader deal that covers 43 ports owned by CK Hutchison all over the world outside of Hong Kong and mainland China. And as far as we know, works on this deal, the broader deal is still progressing in this context, and the deal is not off. But it's worth noting that CK Hutchison and the seller party decided on the potential delay of the signing of the agreement after China piled increasing pressure on CK Hutchison and Li Ka-shing. Bloomberg reported earlier that Chinese authorities have been looking into the deal for potential antitrust and national security breaches, and authorities have also told Chinese state-owned enterprises to hold off on any new collaboration with Li Ka-shing and his family. So we can see that China is definitely unhappy about this deal. So a lot of investors, I think, are still taking a wait-and-see tactic on what could happen going forward, because there could still be a lot of uncertainty on this deal.
And it's China's unhappiness on this deal and that pressure that you've just been talking about that's kind of casting a shadow over a couple of things, right? Which is Beijing trying to build this atmosphere of being, open for business, a predictable trading partner. What are the reputational implications for both China and CK Hutch, if this progresses?
a lot of analysts are saying if China does force CK Hutchison to back out from the deal, it's really damaging to Hong Kong's reputation because CK Hutchison, even though it's based in Hong Kong, it's registered in the Cayman Islands, and all the assets involve CK Hutchison's overseas assets only. So it's a private deal between, two private parties, and if China has forced CK Hutchison to stop the deal, then a lot of businesses are going to question, are all the deals now going to subject to state approval now in China? So that is going to hurt Hong Kong's reputation, and China's attempt to try to woo more foreign investors to the country to invest. For CK Hutchison, if it decides to stop the deal, it's also going to damage its reputation overseas because only about 10% of its revenue is from Hong Kong and mainland China. The majority of its operations are overseas, and they are in relatively sensitive industries, including telecommunications, ports, infrastructure, utilities. So if foreign countries see CK Hutchison as closely connected to China, then they may think twice when CK Hutchison bid for future projects in these fields.
Bloomberg Shirley Zhao there with the latest state of play when it comes to that deal. We do have more ahead on the Asia trade. This is Bloomberg. Well, Australians head to the ballot box in just over a month, and polls suggest a pretty tight contest between the Albanese Labor government and the opposition Conservative coalition. One of the central battlegrounds is energy policy, and the battle to bring down consumer electricity prices could come at the expense of the push for renewables. Let's take a look at this with Bloomberg NEF Head of Australia Research, Lenny Kwong. So what are the key differences between the policies that we've seen among the major parties?
Great to be here with you. And you're right, so Australia goes to the polls, the starting gun has been fired, and it's really shaping up to be a battle about cost of living relief. But it wouldn't be Australia unless there was some contest around the role of energy policy. And that's because the elephant in the room in Australia is our once mighty coal fleet is reaching its end of life quite rapidly. And by our analysis, about 75% of the remaining coal assets in the market will be looking to exit by about 2035. And so the major parties have to come up with a comprehensive policy platform to replace that capacity, as well as keeping electricity prices down. Now, the incumbent Labor government is really relying on a mix of renewable energy, storage and other dispatchable technologies to fill that gap. And over recent years, they've put into place a variety of policy mechanisms that would really accelerate the investment in wind and solar and batteries. And they're currently targeting about 82% of total electricity share coming from renewables by 2030. The coalition, however, have a very different view of the market, and Peter Dutton has outlined nuclear power playing a potential role in the system. However,
not a lot of detail on that, though.
Right now, detail is completely scant, and there's a lot of challenges to overcome. Nuclear is illegal in Australia federally and at an estate level right now, and with the amount of cost and the time to build, we wouldn't expect it to come online until the 2040s, and so they're likely to rely on coal life extensions and new gas to fill that void.
Gas reservation policy is also being proposed.
Absolutely. So that came out a little bit out of left field, although it's been talked about in Australia over recent years. Now, Australia has become a major player on the gas scene since 2016, where we significantly increased our gas production. And today we send about 70 to 75% of the gas we produce offshore to major trading partners around the Asia-Pacific region. Over that time, though, problems have emerged. As domestic consumers began to compete against international buyers, gas prices rose substantially, reaching their peak in 2022 on the back of the international energy crisis. Gas prices have softened, but remain far higher than many domestic consumers would like to pay for them. And so the coalition is relying on keeping some of those cargoes onshore. The challenge here is the vast majority of gas exports are signed under long-term contracts, and only a very small amount are sold into spot markets. And it's those cargoes that the coalition will be targeting. The challenge is, once again, detail is quite light. We're not sure what policy mechanisms the opposition coalition will use to keep that gas in Australia, as well as incentivising producers to keep investing upstream, even if they're compelled to sell at lower prices into the domestic market. And already producers have voiced their concerns around the impact that this policy or policies could have on their investment strategies in Australia.
Does this threaten the carbon emission targets for Australia?
So right now, and over its term in power, the coalition, so the Labor Party has legislated Australia will achieve a 42% reduction on 2005 level carbon emissions by the year 2030, and it's committed to that under our nationally determined commitment under the Paris Agreement. It remains committed to that goal, as ambitious as it is. However, under the coalition's platform of coal life extensions, going slower on renewable energy uptake, as well as increasing gas power in the electricity grid and gas extractions, it's likely that we would simply have to blow past them. Both parties, at least notionally, remain committed to achieving net zero by the year 2050. So it's really these nearer term decarbonisation goals that are at stake in the upcoming election.
Head of Australia Research at Bloomberg, NEF, Lenny Kwong there. Let's take a look at, as we continue to await and count down, in fact, to Trump's tariff announcements on Wednesday. This is what we're seeing when it comes to trading across the commodities complex. We're seeing not much move when it comes to trading in oil at the moment. We have seen that sort of back and forth when it comes to the geopolitical kind of concerns, that retreat in the overnight session, the tariff outlook, the global growth outlook, starting to sort of way over some of the concerns about supply. That threat of penalties on Russia has added to a more positive short-term outlook for prices, but that's now being kind of outweighed by more downside demand risk than anticipated by the end of the year. We are seeing iron ore seeing a little bit of upside there, but I should also mention tin, just one of the commodities hitting the highest since 2022 on these concerns about supply shocks, I should say, from Trump's tariffs. More ahead on the Asia trade. This is Bloomberg.
Xiaomi has confirmed that one of its SU7 electric vehicles was involved in a crash on a Chinese expressway last month. The local media say it killed 3 people. It's likely to spark scrutiny over the smart driving software deployed in many of today's cars. Let's bring in our China correspondent Min Lo in Hong Kong. Min, we know that Xiaomi has set up a special team to investigate this, but what exactly do we know so far about the crash?
So local media reports say that there were 3 college students in that car, and according to an accident report provided by Xiaomi on its official Weibo account, the smart driving function had been engaged less than 20 minutes into the crash, and an alert was issued because the driver has a hands off the wheel, which is illegal in China. And then seconds later, another alert was issued regarding an obstacle ahead, and then the driver then took over control of the wheel, and the car then crashed into this concrete barrier on the side of the road, and it exploded into flames, killing the 3 people there. And Lei Jun, the CEO of Xiaomi, has said that, as you can see on the screen, that they have not had access to that vehicle, and so there are still a lot of questions that are unanswered, but they are cooperating with the police. They sent a team down to investigate the site of the accident on the second day of the accident, and they have provided EV data to the police on Monday as well. But certainly it raises a lot of concerns around the safety and reliability of these smart driving functions in modern cars today, and whether people are putting too much faith in technology and too little attention on the road.
Other battery makers like CATL, BYD have made statements. What have we heard?
Yes, so because the car had exploded into flames, it also raises some questions about why that is. Of course, the impact of the crash could be affected, but could there be other reasons as well? For example, the battery quality or the design of the module. And so CATL has released a statement saying that it doesn't supply batteries to that particular car in question. BYD, which is also a battery maker, had released a statement as well, saying that the components of that car has to be released by Xiaomi, but it says while it does supply batteries to Xiaomi, it says it supplies only the battery, and the design of the battery pack is the responsibility of Xiaomi. And this accident comes as we had also seen other safety concerns arise with other car brands as well, including Tesla in the United States after several crashes, including a fatal one. NIO back in 2019 had to recall thousands of its cars after they started smoking, and CATL at the time said that its battery cells were not compatible with the battery casing in those cars, and certainly a hit for the company's share prices as well, which closed 5.5% lower at the close yesterday.
Min Lo there, our China correspondent, coming to us with that story. And of course, some of those associated names will be watching as we get into the start of trading in Greater China. That's it for the Asia trade. Our markets coverage continues next. This is Bloomberg.